Nitin Raheja too on the show with us. Nitin, it seems that, that knee-jerk reaction that we saw after the failed TLTRO 2.0 and the kind of concerns that it threw up, that, again, it's back to square one, liquidity in the system, but no one wants to lend. Seems like that fall is getting somewhat arrested. 2 days and we've seen a good steady recovery for the financials.
Yeah, sure. I mean, we did see that issue as far as the failed TLTRO was concerned. However, my own view is, yes, there is value in a lot of these financials. But at the same time, don't forget that the road is yet very long and it's not going to be smooth. It's going to be pretty rocky along the way. Clearly, the environment is, not completely in favor of the NBFC pack for the present moment. Considering what's happened with, Franklin Templeton Mutual Fund, mutual funds were large lenders to NBFC and so on and so forth. So I think the whole wire route wherein RBI provides liquidity to banks and then banks go and provide forward liquidity doesn't seem to be working efficiently, at least in the present moment. Because banks seem to be in an extremely risk-averse mode. So I think we will yet get share of volatility as far as a lot of these NBFC and financials are concerned going ahead. I don't think we've seen the last of that as such. Having said that, clearly, there are some top tier companies in this segment where valuations have all come down dramatically, which are ones where one should probably start, looking out, not with a short-term view in mind, I think with a long-term view of at least a couple of years. However, better than all of them, I yet believe that the private banks, especially the top 3-4, are really going to be benefiting immensely out of this. And they are an even better place where one can look to be.
Sure, and you are seeing most of those names actually hold out. Amidst that, Nitin, you've got earnings as well, with the market is now digesting and receiving. Of course, the big news this morning was Reliance, which is slated to come out with its numbers on April 30th. More importantly, the rights issue that they're going to mull about. And, that's really giving very positive signals to the market. Having said that, the stock has already seen a stupendous recovery from the March lows. You've already seen that re-rating moment when the FP deal got struck. Do you think the stock can further push higher from these levels, and is there still opportunity to buy into it?
So I think if among all the larger cap names, if you really look, Reliance seems to be pretty well positioned in the lot. In terms of the fact that, even though it's, oil refining business would be under some pressure in the short term, the retail business should come back. Not so fast, but over 6-8 months. But telecom will do well, and the fact that they're unlocking value kind of sends you a message, and the whole deleveraging also sends you a message that possibly there is, because don't forget, once you pay off or reduce the leverage on your books, some part of that flows into your market cap. When you look at it from an enterprise value basis. So yes, I think Reliance seems to be in the larger names, better of the lot and more well positioned.
With us, Nitin, lots more to chat about. Just